Donald Trump has once again backed down, this time on his proposed tariffs on imports from Canada and Mexico. This reversal came just 24 hours after his previous retreat on the same issue, highlighting the influence of the stock market over his decisions. Yesterday, the market reacted sharply to Trump's economically questionable tariff plan, effectively forcing him to walk back one of its most damaging components: tariffs on American-manufactured cars that cross the borders of Canada and Mexico multiple times during production. Had these tariffs been implemented, the price of a Dodge Ram pickup truck would have surged by $20,000, marking one of the most significant inflationary actions ever undertaken by a US president. The stock market's reaction reflected widespread fears of not just a recession but a potential economic crisis reminiscent of the Great Depression, as noted by the Wall Street Journal. Trump's tariff approach echoed the infamous Smoot-Hawley Tariff Act, a Republican-led policy that contributed to the economic collapse of the 1930s. Though not initiated by then-President Herbert Hoover, his decision to sign it into law played a significant role in his political downfall, paving the way for Franklin D. Roosevelt to lead the country out of the crisis. Faced with a plummeting stock market, Trump announced a so-called pause on certain tariff implementations against Canada and Mexico, a delay that mirrors his previous month-long hesitation. In stark contrast, when Trump is truly committed to a policy, he acts without hesitation. For example, his administration swiftly halted humanitarian aid, including food assistance for famine-stricken Sudanese children. No pauses, no second thoughts, just immediate action. Similarly, Trump's administration, backed by Elon Musk, has dismantled the U.S. Agency for International Development, a key provider of aid to starving populations worldwide. There was no hesitation in that decision, underscoring the administration's apparent indifference to humanitarian crises. Yet, when it comes to tariffs that threaten economic stability, Trump suddenly becomes cautious, revealing just how disastrous even he knows his own idea to be. Today, Treasury Secretary Scott Bessent appeared in New York City, where inflation has driven the cost of a dozen eggs to $10, and declared, "I'm not worried about inflation." This statement is particularly striking given that Trump has managed to find a Treasury Secretary even less suited for the job than his first. Bessent also dismissed concerns about rising costs, saying, "Access to cheap goods is not the essence of the American dream." Imagine the backlash if a Biden administration official had suggested that low prices were unimportant to American consumers. Meanwhile, Trump continues to contradict himself. In a blatant lie, he claimed, "I'm not even looking at the market," despite having previously bragged about how the stock market soared after his election and how it would have crashed had he lost. His history of tying his presidency to market performance makes his latest denial laughable. The Wall Street Journal editorial board has now highlighted a key legal flaw in Trump's tariffs: they are, in fact, illegal. He is invoking the 1977 International Emergency Economic Powers Act to justify his actions against Canada, but nothing happening between the two countries constitutes an emergency under the law. Historically, presidents have used this act to impose sanctions or freeze assets, not to levy tariffs. Even Biden, in sanctioning Russian imports in 2022, did not impose tariffs under this act. Furthermore, Trump's tariffs directly contradict the very trade agreement he once touted as the greatest trade deal in history. His administration renegotiated and signed a revised version of NAFTA with Canada and Mexico, only for Trump to now claim that the deal is terrible and that he alone must fix it. The contradiction is glaring. Ultimately, Trump's tariff plans are not just economically reckless but legally dubious. His pattern of retreating under market pressure while pushing forward with harmful policies elsewhere reveals a presidency dictated not by principles but by the whims of financial markets and personal whims. The stock market remains his ultimate boss, and this latest reversal is proof of just how little control he truly has.